How's it going, everyone? It is Wednesday, April 3rd, 2024, and this is the video for today. So, in our last video, I called out RTX, and I didn't say to enter. I gave some specific instructions. I wanted to see RTX on an LRSI M15 alert. So you can see here it was looking really nice today, pulled back. Looks like it's testing this breakout on the D1. So let's take a look at this breakout right here. So makes a move higher, pulling back to the 8 EMA, testing this breakout a little bit. And no M15 cross yet. So it may happen today. We have a nice move in the market, which we'll get to in a second. But looks like it's digesting some of the gains. When it is ready, sufficiently testing the bid, then we're going to get our next leg higher. And I think we have a great entry point to take a deep in the money call on this stock. So still went on this here, but no trade yet. We'll see if we take it on a we'll see if we take it today, but if not, that's okay. There's plenty of other fish in the sea. So let's get into our longer term market bias. So now we have a couple of news events this week, so I want to talk about that first because those have the impact to those have some information on our long-term fundamental driver. So if we take a step back here, and I haven't talked about the fundamentals in a while because nothing has majorly changed, and things don't majorly change, every single day or even every single week, sometimes not even every single month. We're just kind of keeping an eye on what could change. We know that the market is driven by the bottom line earnings, and that's the first thing. That's the first major thing in my mind for this one. We have Q1 earnings. They can set the tone for the rest of the year. We know that mega cap tech is a huge component of it. Now that NVIDIA is in the mix and we have a Mag 7 setup going on over here, that has sort of shifted the power of mega cap tech earnings not only to January, right? So here's mega cap tech, but here's also NVIDIA earnings on the 22nd. So we have more market moving events, which I think is actually not a bad thing. It creates some more periods. There's sort of more evenness now, I think, instead of having these bids into earnings. So that's I think it's nice, in my opinion. So we have mega cap tech earnings. That's the first thing that's kind of coming up on my mind that's important. Now, that's not really coming up until the second half of the month, but we also have to keep in mind the bank earnings, which kick off the earnings season. We have JPM on the 12th, which I'm actually in this trade, but I don't think I've called it out on these YouTube picks. But that is also the consideration. So we want to see just generally how the market is doing. I like to use FactSet. And, you kind of get the reports over the course of time. Maybe, once there's like 70-80% of stocks that are reported earnings, you get to see how they've done. The main thing you want to keep in mind is what are analysts predicting for this earnings round and what are they not predicting? Typically, analysts have earnings revisions, so like they'll make predictions early in the year and then they'll revise those predictions. And typically, those revisions are downward revisions. So they'll say, hey, actually, we're expecting 3% growth. I'm just making up these numbers right now, but we're expecting 3% growth, and actually, no, we're going to think it's 2% growth based on how Q4 earnings went in the first quarter of this year. So the good news is from FactSet, their revisions are lower than what they typically revise, which is a slightly bullish sign. Okay, so that gives me some more optimism going generally into earnings. I'm not making any earnings predictions. I'm just sort of seeing what came out, what are the expectations, and what are the reactions. So if I looked at the mega cap tech earnings from Q4 or the Q4 earnings that came out in January, I thought Apple was fairly neutral. And let's take a look at the charts here and let's look at the earnings date because I think it's a quick and easy exercise. So let's look at Apple. All right, so Apple had earnings and then it came back up. So I thought that was a pretty neutral move here. Let's look at Amazon. Amazon had earnings here. I thought that was pretty positive. So I think that's a pretty positive sign. Another positive one was Meta. We had earnings, gapped up, held all those gains. Very, very nice move. We have NVIDIA. Nice gap after earnings, and then we continued on higher. Also, nice move. All right, what are some negative earnings? Microsoft had a negative reaction, and then it kind of climbed back up. So Microsoft, I think, I initially thought it was bearish, but ended up being pretty neutral. So that's more the neutral category. Let's look at Google. Google had a negative reaction till earnings, and it tried to fill in the gap here. It was pretty bearish, so I classified this as on the negative side. And then if you look at Tesla week after earnings, and its bearishness has continued this year. I'm not going to get into fundamentals, but it looks like there's stuff with like sales and stuff like that, and EV market's not doing as well as they thought they would do. So there's these macro revisions. But if we look at these Mag 7 overall, we had 2 neutral, 3 positive, and 2 negative. So I thought that was a slightly bullish sign on the mega cap tech side. And then I like to use FactSet to see, okay, what's the earnings generally doing in aggregate, right? So if we look at, bank stocks over here, they've rallied up tremendously. And here's the earnings reaction over here. Pretty much flat. Initial reaction was bearish, and then we kind of filled in. Didn't really matter, and we are continuing on the train. So that's the first thing I'm looking at. We also have some minor economic events. So yesterday we had JOLTS, which was pretty in line, and there was a neutral reaction in the market. We had ISM manufacturing on Monday, which had an initial bearish reaction. So yeah, here's April 1st. So let's look at that M5 reaction here for ISM services. So you can see here's where the reaction came out. Initial downward reaction. And then we started to just compress. Today, ISM services was slightly lower than expectations, which actually had a bullish sign because I think, and here's the logic that I'm understanding, and I'm using kind of the help from the pros to kind of piece this together, but we're in a high interest rate environment and the economy is doing very well. ISM services is an indication of economic strength. If it's not in contraction territory, it's above 50 and it's growing. That means that the economy is generally doing well because the US is an 80% service economy. So if it's falling in line on expectations, it means economic growth is not going as strong as people had initially predicted, right? It fell short of the expectations. So weak economic backdrop would put pressure, in theory, for the Fed to lower interest rates because now there's less upward pressure on inflation, and the risk is that if there's no upward pressure on inflation coming from the economy, then rate cuts could spark a recession, and that would be bearish. So this actually confirms that the market believes that they want the rate cuts. That's what they want. So if we know that that's what asset managers are looking at, then we know what the market deems is important, right? And I think the FOMC and interest rates have been all the rage since 2022 and even a little bit of 2021. Because at first we're looking at rate hikes, then we're looking at rate pauses, and now we're looking at rate cuts. So the actual nature of what's happening with the rates has changed, but those things are the things that are important. So that's kind of my fundamental spiel. Again, I'm just sort of learning this stuff, and I think, to be honest, because it's non-technical, it's sort of the hardest part of the puzzle for me, and I don't have an insane amount of confidence like someone like Pete would, right? Or even like Hari would, where they trade for a living, and they really know how to weight this information accurately. I'm just trying to put this information in a clear way the best that I can. So that's all I'm going to say on the fundamental bias, but everything coming together, I am still bullish, right? Economy is doing strong. Basically, unemployment's good, ISM services are good, right? That's kind of like my 80% sort of rule. And then you can kind of piece together the other factors. Okay, long-term technical bias. We know that we are still bullish, and I think the easiest clue is that there are just more red candles over here. More red candles means we're testing the bid more, test, more sideways movement versus over here where we got a ton of green candles, not a lot of red candles. I mean, you could count the number of key red bars on a single finger, right? And now over here, there's so much more. So that tells us that the rally is slowing down. I think that's one of the key observations that I learned trading bull markets recently, is that the nature of the bull market that changed. Not all bull markets are the same. So that's our long-term technical bias and fundamental bias. We're still bullish. We're just less bullish as we were. We're not chasing anything. We're just waiting for dips. That's kind of the marching orders depending on the market price action. Now, our short-term market bias has been changing quite a bit. So we're a little bit bearish over here. We're a little bit more neutral. We're a little more bearish over here. And now we found some support, and it looks like we're trying to get above this prior day high. So far, we're doing a pretty good job. So I'm a little bit more bullish in the short term, and here's why. Came back down, tested the support, and looks like it is holding. We had some major support at this breakout over here. It lined up with a VWAP-Q and the top of this compression all the way back from beginning of March. Oh, looks like D-Dog's looking pretty weak. Oh, and so is Lulu. Okay. So we're finding support here. If we get a close above this prior day high, I think it's a nice opportunity to enter some swing longs and some put credit spreads. We'll have some more information about halfway through the day. So I'm not worried about if the market's too overextended, because we're clearly not. I'm not worried as much about a pullback because we're finding support. We have some strength from the news, and we have some price action to warrant it so far. I'm not also worried about a capitulation because the move has been really weak. So I know the price action that I want to see for capitulation, which will be, again, some stacked green candles that really break through. I mean, at this point, it would have to be somewhere like 530 if we were just to draw a simple trend line like that. So, I mean, think about it. What would have to happen in a couple of days? We'd have to get through all the way over here. So maybe 528, 529, and really accelerate on the move. And it'd probably happen in a big gap up. I don't think it would have this parabolic move just yet. But we don't have to worry about the bottom falling out. So I always ask those questions every single day because it helps orient my long-term perspective, right? We're pulling back, but it's not the end of the world. So we're support and resistance. I have support today around this level, this 517, 518 level on this breakout. Resistance, we have some short-term resistance at this gap fill at the close. So right over here, 522. Our next level resistance is 524. So those are the 2 points. Looks like we may have hit a small amount of resistance near the low of yesterday, but I'm looking more at the close of these candles. I think there's more price action. If you look at the close of the red candles and the opens of green candles, you can see how there is more reaction at those levels. That's kind of what is more significant. So I'm going to put just these levels here. So those are our levels in the short term. So let's look at the market intraday. We had a gap down. There was I think a negative reaction to ADP, which was stronger than expected, right? Which meant basically higher rates for longer. That's what it means. And now this actually might be an interesting opportunity, by the way, for me to enter on my day trade long here. So I gotta take a quick look at AVGO. So we're gonna check that in just a minute over here while I get to this point. So today, what sectors were pretty strong? Well, industrials were pretty strong. Staples and retail were pretty weak. Tech and semis were also doing well in the morning. They're responding quite well to the SPY move up. If I look at kind of the market components, mega cap tech was reacting very positively. Tech was pretty strong in general. There was pretty decent breadth. Our flight to safety assets were pretty weak, so VIX was down, and staples and utilities and things like that were also down, and we had a lot more stocks on heavy buy. So I was fairly bullish. I put a 2 bullish on the components. I like what I was seeing over there. In terms of the intraday bias, my bullishness was a 2 about an hour in. So the price action yesterday was pretty choppy, and then we managed to get some liftoff from this support. So I thought this was pretty good, but it wasn't anything, worth trading in my opinion. Today we had a small gap down, higher low, filled in the gap pretty quickly. Nice long green candle from the ISM services reaction. The key part of this is that we didn't get much retracement and it held, right? That's what I like. It held. And we managed to climb up higher. Now the candles are getting pretty tiny bodied, lots of tails, so we know that the move is running a little bit out of steam. But what I also liked over here is that we had a 1OP bullish divergence. So I think if you took any starter longs over here, you could consider adding to them, and you got a nice chunk of the move. Now, over here, so basically going into this, I'm like, hey, I'm a 2 bullish. What would get me to any of the other levels, right? And that's what I've been trying to ask myself every day. So I'm going to start from most bearish to most bullish. So right now I'm 2 bullish. What would get me to a -3 bearish? I need to see like long stacked red candles that break through this low of the day and this D1 support. That's the only thing that can get me bearish, right? It's really hard for me to flip. It would have to be a strong V-shaped reversal. I think it's very unlikely. A -2 or a 2 bearish needs some strong, I need some red candles here, perhaps a double top, and we actually break through this low of the day. That would be pretty bearish because we're unable to hold the support level and all these gains previously established. A 1 bearish is we have some red candles that reach the low of the day, but we actually aren't able to get anything going. And this would be bearish because it means that we gave up all the gains and this retracement is pretty deep. So what would get me more neutral? So more neutral right now is we have a bearish move that gets to VWAP. And then we get this move higher. So right now I'm actually a little bit less bullish than I would want to be because we had some decent selling here. We gave up these gains pretty fast. So unless we have an equally strong reaction, I'm going to be a little bit more wary of adding to certain positions.
I understand.
So we had this kind of fake out bull across here. It's one piece kind of flatlining a little bit. My one bias over here, which ended up not playing out, is that this bull cycle doesn't really produce, but the bear cycle hugs the high of the day. So we're just kind of compressing at the high of the day, and we hold a lot of the gains. So it's not super. The bullishness becomes less because we see less buying and the trend sort of wanes. But we do know that there are buyers supporting the move. So we can feel confident that there might be some support on our way up. 2 is our current candle, and then 3, if I were to make me even more bullish, I'd have to see like a tiny pullback and then some long green candles that break through this low of the day and get even more into this gap to the close over here. So if we do see that, then that would get me more bullish. So I think I always lay out this plan before I take any of my day trades so I know what to do. So we're going to take a quick look at AVGO here. And this is an example of a really nice trade. So market pullback, entered AVGO right over here, and you can see how it held up super well relative to the market, and I like what's happening over here. So we're gonna get an LRSI cross pretty soon, and this is probably a place where I would add to AVGO on my day trade because I'm still decently bullish on the market, right? I'm still a 0. I like what I'm seeing. And looks like we're having a strong reaction so far. So this is a point where I'm going to add to the trade. So let's buy one of these. All right, so we added to our AVGO trade, and then we're going to look to sell near this level. So I'm just going to make sure I'm going to cancel my other order because there's actually some minor resistance over there. So that's where I want to take some profits, but looks like we're having a strong move from SPY, so we can stick with our positions on this stock because it has held up very, very well. Look at the relative strength on this. So that's how I'm playing the stock. Okay, so let's give a pick for today. It looks like the market is going to close. We have RTX from yesterday. I have a couple of tags over here that we can take a look at. And we're going to keep an eye on AVGO in the meantime. And let me actually just set a couple of alerts because we won't be looking at this in the interim. Set alert here and over here. So I don't really want to be losing now this long green candle. Okay. So what I've done is I've vetted a couple of really nice D1 charts. CAT has a nice breakout today. If we go to the M5, it has a pretty nice move. It's holding the gains and compressing. So what I want to see with CAT is just for it to digest some of these gains and start making its move higher. And I think that would be a great option. If we get RTX, we're still going to take CAT. They are both industrials, but they are in different sections. So CAT makes heavy machinery. Oh, nice. Looks like these are looking pretty good. Yes, a lot of stocks are. Whoa, okay, there we go. Yeah, a lot of alerts are coming up over here. Look, we're taking a look at Dell in a second, and I don't know why I clicked here, but yes, CAT is heavy machinery, RTX is defense, so they are in different sectors. The industrials is not the same classification, I would say. So CAT is one I really, really like. Let's look at Dell today. Dell has an excellent breakout, tested this bid, and it wasn't as strong as something like, if you remember the meta chart before earnings where it held the gap completely. Nice, there's AVGO, now it's moving up higher. Dell tested, held half of the gap, and now it's been grinding up higher, especially when, look at this, the market has been flat, Dell's been grinding up higher, some excellent relative strength. And this, my chart always does this, but let's take a look at the M5 over here for Dell. So got a bullish engulf at 12.05. So as soon as the market found support, Dell found support. This is a nice setup on Dell, and I think you could probably warrant entering over here. So that's an excellent area. ETN was looking great, but retraced a little bit longer, not reacting to the market. So we're not going to take a look at that. We're just looking at some day trades here. Netflix is pretty decent, but this is a longer retracement than I would have liked. Not as relatively strong as I would have liked. Amazon was also okay. Yeah, you can probably take a very small trade in Netflix, but Dell's one I like quite a bit. So I may take this. Let's take a 1 share trade here on Dell. I think this is a good opportunity. On this stock. Okay. Ooh, it's gonna end up being a long video. I'm just going over all these day trade picks. All right, I guess it doesn't want to go. Let me give it another go. So, and I'm just practicing 1 share on my day trades because I'm still working on getting some consistency in my picks. And they're not as good as my short-term swings. So I'm trading 1 share until I get my day trades right. Okay, so it looks like my broker is not moving. So I'm going to have to do this on okay, so got it on the broker side. All right, so I'm liking CAT. That might be the pick of the day over here. ETN is a nice breakout. It's a little bit choppier than CAT, but you can see when we have these compression breakouts, there is tend to be some nice follow through on this kind of stock. I liked how it compressed while the market was moving down. So ETN could be better as a swing. I think I have an LRSI alert set on this, so let me view this quickly. Okay, create alert, LRSI. Okay. Play was one I also liked as well. Super long compression, and this has very clean price action. A little bit of red, but it's pretty clean. It's pretty grindy. It doesn't get too ahead of itself. Nice post-earning breakout. Excellent volume. So Play is one that could be pretty good. Has decent liquidity as well. So it could be decent for a put credit spread, although I don't know if the IVs are going to really line up with that. But keep an eye on the stock. And I'm actually going to set an LRSI alert on the H1 chart just to see if it has any pullback, and if it digests any gains, we could have a nice entry point. I also have an alert at the high of the day. MPC has continued to move up higher, so I think we took profits here around 206, and it has really gone parabolic. So this is actually, even though we wanted the trade, I think one of the trades where I could have stuck with it more because it didn't really give me any sign that it was going to end. And it still doesn't look like it's going to end. So this is one where we could have ridden up higher, maybe taken partial profits and, ride out some of the move on that. All right, so there's Dell. I'm trying to see what would be the best pick that we can look at. AA is a pretty nice M5 chart. AA is doing pretty well. It's gone a little parabolic though, so I wouldn't chase it right now. VST I think has just broken through its relative high right here. This is an important level. If it can break through, we can really get something going on VST then. So let's see. Energy has been really strong. Marvel's pretty nice for a put credit spread. It was actually funny. I was eyeing this yesterday, and it looks like Pete called it out in the chat today. So it makes me feel good. I'm also working on my put credit spreads. Microsoft, Qualcomm. Okay. Well, I think I really love the cat daily chart. I just you just can't beat this kind of price action. It's just absolutely beautiful. So here is what I'm going to do. Here's the cat daily chart. It's compressing the gains. Right here. So I want to see this hold, and I want to see us break above the high today. And we have some flat bottom HA candles. We're able to get above this trend line over here. I like how we're making higher lows. It just tells me that the move isn't immediately reversed, and we're probably going to go higher. We're just digesting the gains. So cat is going to be my pick of the day. And we will see if we get a fill. So it looks very nice, and I think that we can certainly get a very nice 1 ATR move on this kind of stock. There we go. So that's going to be our pick. I'm going to add it to our YouTube picks. And it looks like that will be it for the video. So a bit longer today, but talked about a couple of things. Hope you guys found this video pretty helpful. Looks like AVGO is doing pretty well. If I take a look at this guy. Oh yeah. So this should be a pretty nice winner. Same thing with Dell. Yep, that's a nice winner. So we're going to keep on there. And thanks everyone for watching. I hope you guys had a great day. And just throw in a nice little short pick over here. This is not a great D1, but I was trying to get better at my grinder picks. This is an excellent M5 chart, not a D1 chart. M5 chart. Keep in mind, right? This is there's a lot of D1 resistance the way. We have to be careful. But just in a vacuum, if you're trying to get better at intraday picks, I mean, I think this is an excellent example of relative weakness. This would be the stock you'd want to trade if you had to be short on a deal like this, which I don't recommend you do. All right, that's it for today. Thanks for listening, everyone, and I'll catch you all in the next video.